Our themes at the beginning of the year were really kind of gauged towards infrastructure spending, so defence, railways, renewable energy, power. That really hasn't changed. Our views towards premiumization within the beverage industry, particularly kind of alcoholic and non-alcoholic drinks, again hasn't changed. And of course, electronic manufacturing sector, where the runway is very, very long for India, both in terms of domestic growth as well as export growth, remains a very long-term theme to be played. And in terms of hospitality, we think people are going to continue to travel, want more experience. So of course, hotels and airlines, remain key in terms of our themes to be played throughout the next, not just this 1 year, but the next 2 to 3 years. One new theme that came out post-election was maybe a possible switch towards FMCG companies because of a potential boost in rural spending, aided by more populist measures by the government. We think that's a bit early. We think it will take time to flow through to the top line of these companies and therefore profitability. But one sector which we have become more bullish about is the IT sector, which gives you that defensive security in terms of revenues. And also we think it's towards the bottom of the cycle now. We're starting to see two things. One, discretionary orders being given to these companies, the IT companies. And two is that the expectation now that interest rates will fall sometime this year in the US will give that boost to the IT sector going forward. So we think now is probably the time to be looking at IT rather than FMCG in terms of a switch in terms of allocations.